key takeaway with lithium is that there is a lot of technology that is currently invested in the lithium as a product, right, that's required for that technology. I don't think that is going to be replaced anytime soon, and therefore I think in the long term, lithium prices will recover. There is an opportunity now, if you are a patient investor, to pick up companies at a fraction of their previous price. And, I think the saying is the cure for low prices is low prices. I think if there are patient investors, there are probably good opportunities to be had, both in producers, but also in explorers as well.
Lithium has been the best performing commodity within the last 3 years, but also one of the worst performing commodities within this time frame. It's a very new, but also a very volatile market. But as a contrarian investors ourselves, we are looking for assets that are, let's say, a little bit out of favor at this point of time, but that can also deliver a huge upside potential for our investment within the future. And today with me is Paul Adams. He is the CEO of a company called Cali Metals, listed on the ASX in Australia. Paul, first of all, thank you very much for your time. It's great having you.
Thank you very much, Jan. Great to be here.
So, Paul, Cali Metals was created from a spin-out from Karora Resources and also Kalamazoo Resources lithium assets. And you had your IPO in the end of last year, and you started as the hottest lithium stories at the ASX. So what was the reason for all this IPO hype? Let's talk a little bit about the company's positioning in the market at the beginning of the IPO here.
Yeah. Thanks, Jan, for the opportunity to talk. Basically, what you said is absolutely correct. Well, beginning of this year, January 2024, we were the first company to have a new listing on the ASX, and that occurred January the 8th. It was a very, very successful IPO, and I'm thinking that it was probably the most successful IPO so far in 2024. And there were a number of reasons for that. So, as you introduced us, Cali Metals formed from assets taken out of Kalamazoo and assets that were within a Canadian company called Karora. And those assets were the lithium assets from Kalamazoo. They included a couple of projects in the Pilbara region of Western Australia, up in the north. That's called our Doms Hill and our Marble Bar projects. And secondly, we had a large area of ground in what we call the Southern Lachlan Fold Belt, which is over on the eastern side of the country in the states of Victoria and New South Wales, where we pegged about 2,000 square kilometres that we thought were prospective for lithium mineralisation. What we did then was we put that assets together with the lithium rights to all the ground that the Canadian company Karora had in the well-known lithium corridor, which is south of Kalgoorlie and down towards Norseman in Western Australia. And that is where all the action has been in the lithium hard rock mining and exploration space over the last 12 to 18 months. So because that was such a large piece of ground that we had 100% of the lithium rights for, and there had been a lot of corporate activity in that area, it became very hot, as it was the last sort of major land package that was prospective for lithium that was still available at that time. And we had a number of approaches, perhaps most importantly from a company called Mineral Resources, a big player in the iron ore industry here in Western Australia, but also the most acquisitive company in the lithium space. in the last little while. So the reason why it ran so hard in the first 3 or 4 days after our listing in early January was because Mineral Resources wanted to acquire a stake in Cali Metals, and that forced the share price to go from our 25-cent listing price up to around about 86 cents, in the first 3 or 4 days. So that was the reason why the IPO was so successful.
Great. Thank you very much for your explanation. And I think talking about the great lithium potential in one of the best areas for lithium in Australia, a safe jurisdiction, is definitely a reason why a company like Mineral Resources would really buy everything they could get on the stock market to have a portion of your company in their portfolio as well, which is really good. But before we talk more about your lithium potential and all your other great opportunities, let's talk about the lithium market in general. You are what I would like to call a lithium insider, right? And as we all know, the price for lithium has come back from, let's say, $11,000 a ton to like $1,100 a ton. So what is your view on the overall market? Don't we need more lithium anymore? Is the market already? Is there no demand anymore? So what do you think? Why did the price drop so hard?
Well, you're absolutely right, Jan. I mean, the price of spodumene concentrate, which is really how the hard rock lithium miners sell their product, has fallen 90% from the very, very high prices that we saw in 2023 and in the lead up in 2022. And I think there's a number of reasons for this. Obviously, the effect of perhaps a realization that the journey towards net zero is not going to be a straight line where some people were thinking it might be. I think we've seen lots of examples, both in Asia and Europe in particular, and the US, where the take-up of certain lithium technologies might not have been as fast as many had appreciated or had certainly predicted. Then we had some large mines coming on stream. They produced a lot of product, and also is the effect of China as well. So I think we've got a number of things in play, and realistically, it was never going to go a straight line up. There are always going to be periods of excitement, periods where that excitement wanes. But overall, I think in the long term, there will be an increasing demand for lithium as we go forward in our environmental push, at least to reduce our emissions, even if net zero is probably some way away. So I think, these are common. These changes in commodity prices are pretty common in the market. I think most people who follow commodities, mining companies, lithium companies, we experience this on a regular basis. It just happens in some commodities at different times than others. We've seen lows in gold prices. We've seen highs in gold prices. Now you look at the iron ore price is also hovering around about $100. We've got oil at $80, whereas previously it was over 120. So we see these gyrations in commodity prices all the time. I think the key takeaway with lithium is that there's a lot of technology that is currently invested in the lithium as a product, right, that's required for that technology. I don't think that is going to be replaced anytime soon. And therefore, I think in the long term, lithium prices will recover. There is an opportunity now, if you are a patient investor, to pick up companies at a fraction of their previous price. And, I think the saying is the cure for low prices is low prices. All right. So I think if there are patient investors, there are probably good opportunities to be had, both in producers, but also in explorers as well.
Well, that's what I would call a statement. And also, as I have indicated in the beginning, we are contrarian investors, meaning we have to look for opportunities for markets that are basically at their bottom, but can provide good upside potential for the future. So would you say that the lithium market has found its bottom? And do you think there is an opportunity to see increasing prices within the next 12 to 18 months here? Or do you expect it to go longer?
I think 12 to 18 months is probably a sensible approach with respect to pricing, recovery. I mean, obviously, I don't think we're going to see prices of spodumene concentrate hit those very high marks that we did previously, but that is not really a cause for concern. I think we would all like to see a stable, sustainable price. As the lithium price has fallen away, we've seen a lot of the big projects in Australia actually get mothballed or have been delayed or have been cancelled. And that is including the chemical processing plants that turn the spodumene into lithium hydroxide and lithium carbonate. So there are some multi-billion-dollar projects here in Western Australia that have been put on hold by some of the world's largest producers of lithium. And that is a good sign because it means that at some point the supply will fall. The demand will slowly increase as these technologies become more and more prevalent in our society. And therefore, we should see a recovery in the price. And even if that price goes back to $1,500, $1,600 or $2,000, that should be incentive enough for the lithium equities to feel some positive news.
All right, perfect. Thank you very much for giving us some thoughts about the potential future for the prices here. And I would definitely agree, if there are projects on hold, there could be a supply issue quite soon, and this will be reflected in the prices, hopefully. But let's talk about the management team, you as the CEO, a little bit more, because we always try to tell our investors here that obviously you have to have a good jurisdiction, good projects, great drill results. All this kind of stuff is really important for an exploration company. But in the end, there is a team of people which is responsible for my investment money. And you as the CEO have like the key role here. So give us a little bit of an overview. What makes you the perfect team to bring this company to a success? And also, do you have skin in the game? Meaning, are you invested with your own money into this company?
Yes, and certainly. So my background is a geologist. I've been in geology for 25 years, both here in Australia and overseas. I was in New Guinea for about 10 years as well on some very, very large projects there. And then I went into equities. So I spent 12 years as an analyst looking at junior mining and exploration companies for equity analysis, right? So that was with a Perth-based stockbroking company. I was head of research there. And then in about 2019, I moved back into industry because that's where I kind of felt that with my finance knowledge and with the technical knowledge from the geology, then you put those two together as a director or a managing director or CEO. So I came back into the industry and became a director with Kalamazoo. We were looking for gold, of course, and we have had some success in our projects there. And also, I was there at the very beginning when we started Cali, because Cali, of course, was 100% subsidiary of Kalamazoo. And we pegged this ground because we thought that, it was had some prospectivity for lithium, as well as having some prospectivity for gold, particularly up in the Pilbara region in WA. So was there really right from the beginning of Cali's life. And we had a team that came together to push these projects through the IPO. 2 came from Karora and 2 came from Kalamazoo. And then we've added a 5th independent director by the name of Simon Coyle. We managed to get Simon out of Pilbara Mines, which is probably the best known Pilbara miner in all of Australia. And he was their chief operating officer. So he has a tremendous amount of experience in operating lithium mines and is our independent sort of director. So we had a board of 5 and it was a very, very good team. Graham Sloan, who was Karora's representative, was the original managing director. He was put in by Karora to help the process through IPO. And the strategy for Graham was that once we were through the IPO process, he would then step away and we would then seek a new CEO or MD to take his position. And in about April this year, I was asked whether I would like to take that role. And I had no hesitation in saying yes, that I would. And this is how, the current board sits. Graham took a back seat as a non-executive director, and I replaced him as managing director. So essentially we have the same team. It's just that our roles are now slightly different between myself and Graham. Most importantly, in the last few weeks, we have employed a brand new exploration manager. Mladen Stevanovic has come highly recommended. He was with Goldfields for a very long time. He was with Lithium at the Bald Hill mine as their head geologist. And he's discovered many, many deposits. And he comes highly recommended. We have just spent a week together at the Diggers and Dealers conference. And then we spent a few days out in the field looking at our projects, our Hiddensville lithium project. And he is going to be a marvelous addition to our team. So I think we've got a really good team now. Mladen brings a lot of experience in management and also is technically very good in lithium. So I think we've got an excellent team, and you're quite right, Jan. The team is very, very important, and I think we've really landed that one really well.
Perfect. And how about the management holdings in the company? Do you guys own shares of the company by yourself?
Yes, we do. All of us do, and Mladen and the rest of the directors are also very, very incentivized through performance rights to go and find deposits. So unless we find the deposits, then we don't get the performance rights. So we are very incentivized and aligned with all shareholders to go and find lithium deposits. That's obviously what we intend to do.
Great, and let's talk a little bit more about this specific topic, your exploration program to find lithium deposits, maybe other commodities as well. I mean, if we go through your presentation, it says you had rock chip samples from your Sparuggenville project with more than 5% lithium oxide, which is an outstanding result. Obviously, we're just talking about a rock chip sample, but that shows the potential for the lithium on your ground. So tell us a little bit more about your current activities and what can your shareholders expect over the next few months and weeks.
Yeah, sure. You're quite right. The Spargoville project is where we started our exploration journey at our Higginsville tenement. And if you remember, our Higginsville tenement is in that lithium corridor that Mineral Resources was so interested in. So we started a program there of mapping and rock chip sampling just prior to the IPO, and we received some very, very good rock chip results after we listed in IPO. And importantly, there were some very large spodumene crystals that were found in the mapping and in the rock chip sample. So that gave us some encouragement that we were in the right place and that we had the right chemistry for the formation of lithium mineralization, and specifically the spodumene, because the spodumene is the mineral that we're all trying to find. So we did some early work there. We then undertook a small drilling program of a reconnaissance type nature, and we found a flat dipping pegmatite about 15 degrees up to, I think the highest thickness was somewhere around about 17 meters thick, and the best intersection there was about 10 meters at about 1% lithium oxide. So that's a very good start for us. It was our very first drill program, and it was successful in finding the type of mineralization that we need to find to build a deposit. And then we've also done some early exploration work at Widgie-Malfa, which also had a small drilling program that also intersected spodumene in lithium pegmatites. So sort of 2 out of 2, we were encouraged by those results, and we are now planning a follow-up program around the Spargoville area in particular, whilst we have a look at some of the other areas at Higginsville that we think are also highly prospective. So we actually put an announcement out a few days ago. In fact, I think it was Tuesday last week, where we'd gone through the database of drilling that Karora had, and we found about a dozen pegmatites sitting in the drill database in and around the old Spargoville Reward gold open pit. And that's very interesting because in that program where we've gone back to have a look at the original core, the diamond drill core that was drilled many, many years ago, and we've actually found spodumene in that core in several drill holes underneath the pit. So I would direct your listeners to have a look at that announcement, because that is probably the most significant find that we've made so far from that historical data review program. And the orientation of those pegmatites seems to be matching the orientation of the pegmatites that we drilled in our first program. So it's all kind of coming together that we think the interpretation that we've made from the previous drilling is correct. It's matching what we see on surface, and we are currently going through a process of identifying how to move that that part of the project forward, right? And I would suggest that we've still got about 49% of the core still to look at in that area, or across all the core in the Higginsville project. So it's early days, but I think we've found a pretty significant target going forward. And I think, we've also done a very large geophysics review of the whole of the lithium corridor, really, which also covers the Higginsville tenements. And we've identified, at least preliminarily, we've identified quite a large number of targets. So we need to go through that very methodically. We need to assess and rank those targets against each other before we leap into another drill program. Because one of the issues that we had, it's a very, very large area with a large number of opportunities, but we don't know which opportunity is better than others. And it's very, very important for us to consider as many opportunities as we can to do the science, to do the geochemistry, look at the geophysics, have geologists on the ground, do the mapping and the sampling, and then the soil geochemical programs to give us targets that we then want to go and drill, right? So there might be 20 targets that we would like to go and review. But for instance, we might want to rank those targets and then say, let's drill our best 3 and see what comes of that, because, shareholder funds are hard to come by and they need to be spent as responsibly as we can. And I think, we talked to many people at Diggers and Dealers about this strategy, and everybody agreed that particularly in the current environment, that target generation is the most important thing that we can do with shareholder funds right now, right? Then when you've got a lot of targets, you've ranked them, you've established the priorities, and then next year we can go through with a much more focused drill program on those high priority targets. And that is the strategy that we will employ at Higginsville over the next 6-9 months. It's really focusing the science on the numerous targets that we have.
Perfect. All right. I would definitely agree, right? The strategy may take a little bit longer because you have to do a little bit more work. But in the end, drilling is the most expensive thing when it comes to a junior mining exploration company. And therefore, you have to spend your money wisely. We did talk about the Higginsville project. Are there any other exciting strategies upcoming for your other projects and the other areas of Australia you are based in?
Yeah, sure. And look, there are 2 other areas that we think are very prospective. Let's take our Pilbara tenements next. They are also in Western Australia, up in the north. And as your listeners might probably know, the Pilbara is also the home of some very, very large lithium deposits, including Pilgangora, which is the Pilbara Minerals. And Mineral Resources also have a very large project there called Wodgina. And they're not far from our Doms Hill project. And of course, in Doms Hill and Marble Bar, we are in a joint venture with SQM. And SQM, a Chilean company, they produce something like 20% of the world's lithium. They're a multi-billion-dollar conglomerate. Their lithium part of their business is only a portion of SQM's business model. But they've come over to Australia and they have been very successful in establishing their relationships in Australia. They've done some magnificent corporate deals over the last 2 years and have really established themselves with a large footprint in Australia. And we feel very lucky to have SQM on our team. And we're currently going through our priority ranking and our targeting for the next part of our exploration program. So that relationship has worked very well for us. We've been up to site with their geologists recently, and we are expecting to be able to finalize our work programs for the next 6 to 12 months in the coming weeks. So we're looking forward to that. And then also in the eastern states, so in Victoria and New South Wales, we have a very, very large package of ground. It's 2,000 square kilometres. Kalamazoo pegged that for a few $1,000s. The ground was all open, and we were looking for lithium. We knew that there was lithium pegmatites in Victoria at the Dorchamp project, which was owned by Dart. And in fact, SQM went into a joint venture with Dart on that project. We liked the geology. We liked the prospectivity. Dart were able to drill lithium pegmatites on their project. But we took a slightly different view, and we went a little bit further to the north, and we got hold of a large project to the north of their project called Tallangatta in Victoria. And then the geology continues into New South Wales, and we pegged a large portion of ground there at a project that we call Gingillic. And both of those targets are prospective for lithium. They're also prospective for tin. And interestingly, because tin and lithium can be associated with each other chemically, it was actually the tin occurrences that we used as a proxy for lithium to peg that ground, because there's no lithium exploration in that part of the southern Lachlan Fold Belt, but there had been some tin occurrences. So the tin was mined in the 1920s and 1930s, and very little really has been done on that. But we thought, well, where there's tin, there might be lithium, and so we pegged that ground. And in fact, at our Sweetwater prospect, we found, and there was a known lithium pegmatite there, and we found that outcrop. Some sampling there, we've got lithium oxide up to 1.5%, and spodumene is the dominant lithium mineral. So everything there is pointing towards a brand new province for lithium. Nobody has explored there for lithium before. We've wrapped up a lot of the ground in that area, and we think that is very, very prospective. And then one of the first things we did was we ran a LiDAR survey, so almost like a radar survey of the topography, and we actually found a linear structure that looked very much like a pegmatite, 700 meters long. It had never been seen before. And we went onto the ground and confirmed that that was an LCT pegmatite. And even though the results from that were not economic in terms of the lithium oxide numbers, it did show that the vector was going towards the northwest, and we do need to do more work there. So that was a bit of a win. What we've also got at the Sweetwater project is some old tin workings that were quite extensive, And historic sampling there showed tin in veins up to 11.5%. I'm not sure if your listeners know much about tin, but anything over 0.5% is considered very interesting. We're not saying it's all 11%. That was a rock chip, right? And we always put a caveat on rock chip samples. But there are a lot of samples in that area that are over 1%, up to 5%. So we think this is a particular opportunity. It's an area that we already hold 100%. We don't need to go and find a new project. But the feedback that we got at the Diggers and Dealers conference, which is probably one of the biggest mining events in Australia each year, was very positive towards the tin. So in our exploration strategy for the Lachlan Fold Belt, we hope to spend a little bit more effort on deciding what opportunities there are for tin in that area, and then how best to explore for that. So it's quite exciting. It's early days, but I think internally the team feels that this is an opportunity that we should now follow up, particularly that the tin price is $30,000 a tonne. It's 3 times more than copper. And, there seems to be a lot of interest in the tin at a time when lithium is going through a little bit of a quiet phase.
Yes, definitely. Thank you very much, Paul, for summarizing the whole story. I mean, there is a lot of explanation necessary here, but I think we did a great job and touched base on basically everything you have to know. Just to summarize, you just did an IPO and you listed by the beginning of this year, meaning you're a quite new company to the market, but your projects come from 2 very established companies, Karora Resources and also Kalamazoo Resources. You do have a team with a good background, good track record. Also, you guys have skin in the game, meaning you're invested with your own money in the company and your interests are aligned with the shareholders. All of this sounds pretty good. Your rock chip examples, both from tin and also lithium, sounds really good. Your first exploration results show that you have great potential. You have a clear path, a clear strategy going forward. And I think this really shows that we do have a company here which wants to provide really good shareholder value. Maybe just the last question in the end. Are you fully funded for everything we talked about? Do you have enough cash in the bank?
Yeah, that's a really good question, Jan. And, part of our refocused exploration strategy is to make sure that we actually do. We had, at the end of last quarter, $9.6 million. We feel very privileged and lucky to have that amount of cash in treasury. However, that does not mean that we should be spending that money in areas that we think won't create shareholder value, and hence a slightly changed exploration strategy from us. We're going through a new budgeting program right now. That hopefully will be ready in about 2 or 3 weeks, and then the board will sign off on that new strategy. So we are very, very aware of the market in lithium. We are aware of our share price. We need to be very careful with that money, but to make sure that we are doing activities that are relatively low cost compared to drilling, but relatively high impact in that we are generating a whole list of targets. And I think from a lithium perspective right now, that is definitely the right strategy. A whole list of targets could generate interest from other companies as well. Obviously, we want to drill those ourselves, but that is a potential possibility. And then secondly, our tin prospectivity in the southern Lachlan on Fold Belt is something a little bit new. We had mentioned it in the prospectus. It was always a secondary target for us. We've said that right from the very beginning. But I think, a lot has happened in the lithium market in the last 6 months. We have tremendous potential. That 2,000 square kilometers was pegged because it has tin. And now we probably need to focus a little bit more of our attention and our budget towards those opportunities. And I also did want to mention too, before we leave, that Karora, they've had some corporate activity themselves, and they've recently been merged with Westgold. Westgold are a very well-known gold mining company here in Australia. Westgold are therefore our new largest shareholder with 22%. I managed to catch up with Westgold at the Diggers and Dealers conference, and they are supportive of what we're doing. So I think that is very important. They are our biggest shareholder, and we will be working closely with them at our Higginsville project. So I just wanted to mention that as well.
Great. Paul, thank you very much for bringing everything up. I think, as I said earlier, we touched base on everything which is really important for investors in the first step. And if investors want to know more, they can definitely approach you or me, and we can redirect the questions towards you. So thank you very much for your time. I'm really looking forward to your news flow in the next, let's say, 6 to 12 months. And yes, I wish you a successful drill campaign for the next few weeks and months.
Thanks, Jan. Great to be able to talk with you today.
Yes, it was great having you. Thank you very much, and talk again soon.
Thank you.